Hello everyone, this is your swing trading stock market outlook for the week of April 17th. I'm Corey Mitchell with TradeThatSwing.com. I go through the same process each week, basically looking at overall market health. That helps me determine if I want to be taking trades in individual stocks. I prefer to be trading with the tide, so to speak. So if we have strong movement in all the indices, that's going to make it much easier to make money trading individual stocks than if you have stocks that are going down, the indices are going down, and you're trying to buy one or two stocks that are going up. It's going to be harder to make money. So I prefer trading sort of with the wind at my back, and this is what this process that I go through each week is, just seeing how the overall market's moving and how much capital I want to be deploying. So going into this week, April 17th, market conditions are in a recovery state. We have some indices that are doing good, some that are not so good. We have some health indicators that are positive, some that are still recovering. So it's still a mixed bag. I wouldn't mind starting to deploy some capital here. I'm going to keep it pretty small, maybe like 20% of my account or so. Just take a few positions. If things keep getting better, that capital can be deployed pretty quickly. We have lots of trade setups. I did a recent swing trading watch list last week. So this is patterns that are actually setting up right now. And then the big swing trading stocks list is just a list of stocks that have been strong recently. So they may not have patterns right now. It's just a list you can go through and see if things are setting up or if there's any trades in there. They've just been strong. Let's look at the indices. I take a look at a few different indices, and we have quite a few charts here actually. So we have the NASDAQ 100, which is tech stocks, S&P 500, which is large cap stocks. The NASDAQ is also generally large companies. NYSE Composite is pretty much everything listed on the NYSE exchange, which means small companies, big companies, all different industries, a very good indicator of how the sort of average stock, like if you were to just pick a random stock, how is it doing? That's the NYSE is a good indicator of that. Russell 2000 is smaller companies. We have the Canadian index on here. This one, I've also thrown some other charts on here just for interest's sake. So let's take a look at that. So we can see the NASDAQ 100 throughout this year in a nice uptrend. Nothing to be concerned about here, making higher swing highs, this high versus this high, this low, this low. We're moving up. The NYSE, you can see we have a little bit different story. We took out this low recently, so we have a lower swing low there, but a very strong recovery recently. And so that's good. Russell 2000, very weak. So the smaller companies not doing so good. It seems like people are liking the much bigger companies, the S&P 500, the NASDAQ, and or the NYSE. NASDAQ, S&P 500 doing well. The NYSE, which also has a lot of smaller companies in this index, you can see it's struggling a bit more. S&P 500, we've had this nice run up. We were in an uptrend. We're still technically in an uptrend. It's just weak because we have been making these major kind of lower or higher low points and higher high points, and we're moving back up toward those highs. So S&P a little bit rangy, a weak uptrend, but it's still an uptrend at the moment. The Canadian index, lots of energy, gold type stocks, pretty rangy at the moment as well. Got all the way back to this low, and now we're coming right back up to the highs. So overall, it's not bearish. I'd say overall, where it's bullish. We can see we had started the move down here. I think we take out these highs, but that's just a guess. And this really isn't actually a forecast. This is just based on what market conditions are doing. And the last few weeks, we've had a really strong run to the upside. So all of these, at least for the short term, have been quite bullish, and we could potentially be bullish over the longer term as well, just if these uptrends continue. I threw on a few other things that are of interest. Gold has been very strong, along with Bitcoin has been very strong, and Ethereum here is in orange. And throughout this year, just very strong up moves. We had consolidated. This was on last week, and we had ended up getting the breakout for another 10% upside or something like that. The French index, one of the strongest indexes in the world this year. This is EWQ, an ETF that trades in the US but is based on the France market. And you can see we had this plunge here, but then just super big recovery. One of the best markets out there right now. So basically what we talked about. Smaller companies are weak. There's the summary there. And let's look at the health indicators. So what health indicators are, it's what's underlying the S&P 500 and the health of these indices. And this is how many stocks are above their 50-day moving average. It's just a very crude measure of stocks that are in short-term uptrends. And you can see we're just recovering back to that 50% level. It's going to be easier to swing trade on the long side and make money when most stocks are moving up. As you can see, through most of this 2022 decline, we were below this 50% level. Going to be tough to make money. We did have a few periods in here where we were able to get a few trades, get a little bit of profit on these rallies. And if you're into shorting, you could have shorted as market conditions weakened again. But we did have a few periods in here where we got some long trades in. You collect a bit of profit, and then you're back out of the market during these bad periods. So we're getting back up toward this recovery area. This is the S&P. 54% of S&P stocks are above their 50-day. Only 39% of all U.S. stocks are above their 50-day. So again, we have that disconnect where we have some stocks performing well and mostly those small cap stocks not doing as well. Volume not important to me at the moment. This is daily percentage movement of the S&P 500. During uptrends, it is generally, we see very small values. During declines, we see very big spiky things like what we've seen throughout 2022, and we especially see moves to the downside of more than 2% in a day. During an uptrend, those are very rare. We had a whole bunch of them back in March, but we haven't had any for about 3 weeks. So this would be definitely an improvement, but we're still seeing pretty big daily volatility. So this is still kind of indicative of one of those early uptrend or downtrending type behaviors. So this will start to flatten out once we really get into a nice uptrend, and that'll help us really confirm that the long-term uptrend's in, but we still have lots of opportunities, as I mentioned, even during these short-term rallies to trade. So we're starting to get back into better position where I want to be taking some trades. This is the NYSE Advanced Decline line. Advancing stocks versus declining stocks is a daily cumulative number. I've zoomed it in here so you can't see the historics. It's mostly the recent data that I'm looking at. And this actually got above its February high on the NYSE Advanced Decline line before the S&P reached its February high. That's what we call a positive divergence. This generally leads to, when this happens, the S&P also following through to make a new high. That's not a big leap in this case. It's only, pretty close, maybe a few percent away. So that's likely to happen. But it does say that this is positive for the moment. This is up volume versus total volume. It's just a measure of how much buying enthusiasm there is, or much selling enthusiasm there is if it's a really low number. And we haven't had anything. I look for values either at 10% or 90%, meaning we either have huge, all the volume coming in is in stocks moving to the upside, or if it's at 10%, it means like all the volume was in stocks that were moving down. So we haven't had any 90% or 10% values recently, so this one's not really important at the moment. So we have, a little bit of a mix, some recovery. This one's been okay for a while. This one's good. This one's not telling us anything. Price action, you can see a little bit rangy in the S&P 500 here, but coming in from this. So my hope is that we continue to the upside, but again, this is not predictive. This is just based on current conditions, and I trade based on current conditions. If it's looking good, I deploy some capital. Sectors. This might be a little cut off by my video or my picture at the bottom. So we have the 1 week at the top, and you can see it's a bit of a mix over the last 1 week, 1 month, 3 months. We don't have any that are like really strong on all. I would say everything's doing pretty good the last month. So there's not a ton that we have to avoid really. Real estate's been weak. Basic materials and energy were really strong last week and over the last month. So those are definitely ones to watch. Healthcare is decent on all time frames. It's kind of near the middle of all of these. And then also technology and communication services got a little bit not quite as good last week, But overall, they're still the best performers over the last 3 months. So it'd be nice. I want to see if those continue to perform well. They may or they may not, but they're definitely something to keep an eye on. There's no reason you have to look at the sectors. This is only if you're like really limited for time and you want to narrow down your scanning time. You can focus on a few sectors. I do right now when I scan. I'm not filtering for sectors. I'm just looking for the strongest stocks that are out there and looking for setups in those. So this is kind of an optional step anyway. What I'm doing right now, if I see setups I like and they trigger in a trade, like they actually move past the price where I'm looking to get in, then I'll set up, I want to start deploying some capital on swing trades. But like I mentioned at the beginning, it's going to be small to start, and if we keep seeing improvement and if those trades are working, I'm going to deploy more capital. I also day trade stocks in the Euro USD. I like it because it's kind of an everyday thing. Swing trading, we have these periods where we're not trading like recently, and then we're trading again for a while. And here's an example of like a few... Oh, I got to maximize that. A few... Let's see if I can do that real quick. Well, there we go. So we can get these opportunities in day trading stocks. They just occur every day because we have movement every day, and not every stock, like here, Mara usually moves pretty well, but it got stuck in a bit of a choppy range. But we had some, decent trends in some of these other stocks, and I publish a best day trading stocks list each week, and I'm trading the top 4 stocks out of the 6 or 7 that are listed there, and I just watch them for these opportunities. And we have, so this would be, you'd make 2% on whatever capital you put into that trade because the price moved 2% to our target. This one you would have lost minus 0.8%, make 1.5% plus 0.5%. It just kind of flattened out there. Lose 0.6%, make 1.25%. So, these add up. You're making a couple percent a day over 20 trading days. So that's what I like about the day trading, is that you get a little bit of action every day as opposed to swing trading where you can have these lulls. Anyway, that I just thought I'd throw that on there as just another way to trade. You might love swing trading, but hey, day trading is also an option. So that is the outlook for this week. Have a great trading week out there. Until next time, happy trading.